RWC Partners is an investment management firm located in London. We have 9 teams that are all active management styles based in different asset classes. The firm overall is about 150 people. We manage $16 billion. I joined RWC about 3.5 years ago with my partner, James Johnstone. I manage the emerging market strategy and James manages the frontier strategy. We have a team of 18 people, as well as part of the team being in London. We're also in Miami, which is where I reside, as well as Singapore. Originally, we brought over about $800 million. The team currently runs over $6 billion in emerging market strategies as well as frontier market strategies. In addition, I would say that the culture of RWC is very entrepreneurial. 150 people in 3 offices, so it's a young company, it's an innovative company, and frankly, it's a very good company to work for. So I've been covering emerging markets for over 25 years. I actually started in the early 90s, 93, at Baring Asset Management. I actually started covering emerging market debt markets, and both government debt and corporate debt. So that's very different. I am an equity manager right now, but it's very important to understand the macro in terms of debt dynamics, in terms of analyzing the balance sheet. Like myself, the rest of the team has quite a bit of experience. On average, the 18-person investment team has 14 years of experience, but the senior members of the team, like Thomas Alram or Chem, they have well over 20 years covering these markets. Experience really matters just because you get to see different periods, whether it be bear markets or bull markets. We've gone through the tequila crisis, we've gone through the Asia financial crisis, and the list goes on in terms of emerging market crises. So understanding where we are right now in terms of the emerging market cycle is really key. And using those experiences from past crises to apply to today's market can help us to navigate those markets, help us to avoid a place like Turkey, avoid or minimize the risk in a place like Argentina. So we believe that experience is really key. We believe that ESG is important. We don't claim to be ESG managers, but we do believe that it's an important part of the due diligence process. You should be asking questions around governance, social issues, environmental issues. So since inception, since we started this strategy 6 years ago, we put in an ESG scoring system that we were developed in-house. It's our own proprietary model. But in addition to that, we have other tools. We do vote actively using ISS, so we do engage with management teams. We do vote against management if we don't believe that the board is moving in the right direction. And in addition, we use Sustainalytics. Sustainalytics is another tool in terms of analyzing the governance of a company, looking at basically social issues, looking at environmental risks. So we do believe that ESG is important. We believe that understanding the culture of a company, understanding the culture of a board and the CEO and what direction they want to take that company in can minimize the risk. And some of those factors obviously are picked up when we score the company with our internal model. So we have a consulting arrangement with Rice Hadley Gates. When Condi Rice left the Bush administration years ago, she started this firm. We speak to them every 6 to 8 weeks. Bob Gates was the former Secretary of Defense under 2 presidents, so they obviously have seen a lot, they know a lot, they continue to travel, they meet with world leaders, and so getting their advice is very different from getting the advice of the sell side or what we're reading on the front pages of the newspaper, helping us to identify reform ideas and reform stories such as what we're seeing in certain countries. They also help us to avoid areas where we're seeing lack of reforms, or we're actually seeing countries move in the opposite direction. We're currently finding very good ideas throughout the emerging market, frontier market world in terms of companies that have good management, good corporate governance, where we find good upside, where the balance sheets are in good shape. We tend to have more exposure in areas that are skewed to growth at this point, so companies like industrials, consumer discretionary, even materials and energy, which we think will do well in the current economic environment. Emerging market growth overall is still in the 4–4.5% range. That's very, very strong growth. And we think that with some countries like Vietnam growing at 6, 7, 8%, even India growing at 6, 7%, Philippines growing at very high rates, and even the smaller countries like Poland and Chile growing at 4, 4.5, 5%, that offers a very good backdrop for some of these companies.